What's up, you guys? Tesla's up 1.39% today, and in this video we're going to be going over why I ended up getting calls on Tesla, and we're going to be going over CPI data, which is going to be coming out tomorrow. Now, the first thing that we're going to do is go over the actual position that I ended up taking on Tesla, why I ended up entering the position in the first place, and what I planned to do with it. So the calls that I ended up entering today were 322 $180 calls. You can see the execution was here at 12:24, and I paid $5.60 per call. Now, the two charting platforms that I use are going to be TrendSpider and TradingView, but TradingView is going to be what you see on the screen here. And we're going to be using two indicators today. The first one is going to be free, which is Lux Algo's Smart Money Concepts. And then the second one is going to be a market bias. Now, looking at Tesla, first thing I want you guys to understand is that if we look at the daily chart here, we are in a very strong downtrend, right? Even though we're coming into this bullish order block, even though I ended up going long, we are still in a downtrend, which number one means that if you're a beginner, I wouldn't trade against the trend. It's just a lot easier to trade with the trend, at least your first couple of years. The second thing is that when we're looking at creating positions going against the trend, we have to either dramatically size down when it comes to our position sizing, just because our risk is going to be significantly higher, or we're going to have to tighten up stop losses way tighter than we would normally have if we're trading with the trend. So looking at this, we're going to go in and we're going to look at our market bias. And you're going to see here that when we are trading under the market bias and the market bias is red, we are obviously in a downtrend. When it is double red or double green, it means that we're in an expansion. In most cases, I don't want to be trading during consolidation. I want to be trading during expansions, either expansions to the upside or big expansions to the downside. That's the ranges that we want to be trading in. We don't really want to be trading in tight price action. Now, looking at this here, you're going to see that currently we are trading underneath the market bias on the daily chart, but we have a big bullish order block sitting here from 175 up to $184. Now, when it comes to order blocks, everybody, I really think that, like, for some reason believes that it's like a real level that's, there's flow or something coming into it. That's not the case at all. Basically, an order block occurs when we are in normal market structure. So we're making lower lows, but basically we have a break of structure, which happens here as price comes down into a lower low here. And then as this lower low is taken out and we push back up and we start to make this impulse back to the upside, this now becomes our order block. So this low, this candle here, that was the final candle before this massive impulse, this here now becomes our order block. It's red. We could make it green because it's bullish, but we're just going to use red because whatever. In most cases, we will see price pull back into the middle of this order block. And in most cases, we will see this bounce out of this order block. So as you guys can see here, if I go and turn my Smart Money Concepts back on, you're going to see that obviously we have this bullish order block and we're also trading in discounted range. Now what we're going to do is zoom in a little bit more on the 1 hour or a smaller time frame and see what's happening here, right? Well, the first thing that you're going to notice is that we have equal lows. This is a bullish sign that this is going to be a very strong support. So we have equal lows that bounces, followed by equal highs, a very strong resistance, followed again by equal lows, a very strong support. So obviously we know that this is going to be a very strong channel in which Tesla's going to trade in, and it is also coincidentally the order block level that we're currently trading in. And you're going to also notice here that we have a strong low in place at that 174 level. And the reason it's a strong low is because of these equal lows that have come in. So we have a strong low here and a pretty strong high here at 182. So I will be looking for the break above 182. And if that happens, I think that we will easily see Tesla at least push back up to $190, which is where equilibrium is. Best case scenario, back up to 200. Now, what is this equilibrium thing? If we were to come in here and we were to just get rid of our Smart Money Concepts once again, you're going to see that the market is going to move a lot of the times in impulses. This most recent market impulse here goes from this high at 205 down to this recent low at 173. So if we're looking at this range, we know by drawing a Fibonacci retracement from swing high to swing low, that equilibrium would basically be the 0.5. So we'll just say 0.5. That's half of this retracement. So when you see 0.5, 0.618, 0.707, 0.786, basically it just means 50% of this sell-off, a bounce back up to 50% would be at 190. And so basically what ICT says, and you follow, like I'm not an ICT person, I guess I trade market structure, but I've never, like, I don't know the ICT, I don't watch ICT videos or anything. But in what he says is that the algos do not trigger until we get back into at least equilibrium, if not 0.618 or 0.707. That's like, I think, the consensus. But what I was taught was just golden zone is between the 0.786 and the 618. And so what I'll be looking for is the break above 182.50, which will be our pivot or our green light to move our way back up to 192 or 195. And then my stop loss will be at a lower low at about 172. And that's my plan. So if we go over to as well and we look at black box stocks, you guys are going to see for confirmed bullish flow, we have Google, we have MSTR, we have Meta, Tesla is nowhere to be found. And in bearish, we have Nvidia and Apple, and Tesla is nowhere to be found. So overall today, pretty slow day for Tesla. Now, something that we did see that was really, really good, a really, really good trade that we ended up taking was Google. So we covered Google on this channel here a couple of days ago. Did not get a lot of views. People did not care about it, but really, really good trade. And sort of the same type of situation that we have going on here with Tesla, just on a bigger time frame. Pulling back in to this bullish order block support right here. This is our support level. Half of this support level is called our equilibrium. That's usually where we'll bounce, which we got that perfect bounce right there. And on Thursday is where we saw the unusual options activity for this. So if you guys just go to thtcommunity.com, you guys can see all of our blogs, get access to our free courses and stuff. But if you go to the analysis and blog section, go to Big Money Hit Google Hard. This was the flow that came through on Thursday. We ended up following it. We saw the support level that was being tested at the time, and we saw this massive rip and rally about 6.22% since we ended up going over that in that video. And same deal here. I think there's a chance that we could see this move back up to 147, but in all reality, I think we'll probably see max maybe a high of 146 and 147. Now, the last thing we're going to go over is SPY, because tomorrow we have CPI data coming out. The thing I want you to notice is that ever since we broke above back in November of 2023, the S&P 500, even though we have all these money flow divergences, has not broken below market bias. And this is why we have been nothing but bullish since November. If you guys are part of our Discord community, you know all of our trading bots have been absolutely killing it, and they only trade long. And basically what we do is we use the market bias in conjunction with some other things to tell us when to turn on and turn off our 15-minute trading bots. And these things have been on for the longest time because the S&P 500 is doing nothing but going straight up. And so this is why we don't go against the trend, right? The only time I go against the trend is for things like SMCI, which is still a bitch to go against the trend at, which I covered that position entirely for a solid profit this morning. My last one that I ended up covering for $6,000 in profits, but I'll do a full standalone video on that later on. If you guys want to get access to all my trades, trade with us every single day. You guys can see these are my returns here. I only have a 64% win rate, but you guys can get access to all my personal trades in real time, all of our trading bots, as well as all of our courses. The link is in the description. I'll see you guys next time. Peace.